Hello everyone, my name is Marcello Kolax and I am the Managing Director at Clever Markets. Today I am presenting for you the European Energy Outlook for the week starting 26th of February 2024. And as always, we start with the TTF. So we were left hanging with, quite a cliffhanger last Friday. So we see some bullish setups, but all we need now on Monday is confirmation. So let's start with the weekly chart. I'm just zooming out. So here, no surprises. Of course, we just added one candle and we are still bearish. A move below 22.86, which is a low from June 2023, is needed in order to continue the midterm downtrend. So what's the evidence or the likelihood of the trend continuing? Well, we still see that the 8 and 12 exponential moving averages are bearish. We see that stochastic are not giving a bullish signal. We see that the MACD is bearish. We see that bearish volume is still fairly high. Let's give a quick look. Let's have a quick look at the Ichimoku cloud, which is tightening, but overall we are still bearish. And just for the fun of it, let's have a look at something we usually don't look at. I don't know, something fun. Let's have a look at the ATR, for example, the average true range. What is that saying? So if it, okay, there you go. So ATR is a volatility measurement, and the idea is that it simply helps us with determining I don't know, for example, the size of the trade or how far we want to put the stops away. Yeah. And the rule or the textbook rule with the ATR is the ATR is at its lowest or unusually low, when we reach a bottom or a peak. Okay, now we are at an all-time low, but here's the flaw with the tool. Yeah, we were also at not all-time, but reasonably, we are also at a low here, and we are also at a low here, and you're also at a new low here, and you're also at a new low here. So other than here, it kind of went down consistently. So I wouldn't be too concerned about that right now. So let's have a look at the day, because you never know how much lower it can actually go. Yeah, so I think the ATR is a very useful tool, but not very good at picking the troughs or peaks, I believe, overall. Also, if we have a strong trend going, then we see, of course, momentum is high, and momentum is not perfectly, but reasonably inversely correlated to the ATR. So low volatility means we have a strong trend going, which means we have a firm momentum, right? So high momentum means low ATR. So it's nothing new here. Okay, let's have a quick look on the daily chart. So here, that was actually quite interesting. So we ended last week with not a hammer, because we want to see the wick twice as long as the body. It didn't quite happen. But we did get a bullish piercing line, which simply means we do have a red candle. And then we have a green candle that opens a little bit lower and then closes above the halfway point of the previous red candle. So it's this pattern here essentially. But of course, we never act just on a pattern. We always want to see confirmation from ideally an oscillator. So I like to use small pattern confirmation with an oscillator, and I choose the stochastic because I feel that the RSI doesn't really give me any signals, and the CCI might be a little bit too slow. So we get a bullish signal, we get high volume, and we get the candle at an important support level. So that kind of means that chances of this pattern working out are a little bit higher than they are for to not work out, right? But we always need confirmation. So simply acting on a candle pattern, even if it's confirmed, might be a little bit early. So for those of you who are more doing like swing trading, so you want to capture this downtrend, then get out of the correction and then get back in, I would like to wait for a move above the 23.6% FIB, which is at 24.42. So you can see I did draw on these new FIB retracement levels here. So I'm just quickly removing this. So I'm putting it back on. So you can see from this low up until this high. So if we move all of this higher here again, then we have the 23.6, 38.2, 50, 61.8. The level also coincides more or less with the high of this 2 candle pattern, because here the high is at 24.15, so here. So I want to see a move above this resistance range before I start talking about an upside correction or an up leg. So this is tentative. This is a setup, but it's not confirmed yet. And it's important to wait, because if we were to break lower, then yeah, the setup would have been for nothing. I believe that a move below 22.86, which is the low from quite some time ago, would actually help to undo this bullish pattern, and we would probably track along the lower boundary here. So once again, I want to see a break past 22.86 or 24.42 in order to make a decision for the market. But hey, here's the thing, yeah, the near-term downtrend is active until it's not. And right now we are in this descending channel, yeah, and we see that the trend tools are bearish, and we also see that MACD, although it's a little bit coming up, is still bearish on both accounts. We are below zero and we are below the signal line. So it's all looking fairly bearish to me for now. Of course, this will change with a move above 24.42. Let's have a look at the 15-minute chart. So this is quite exciting. So we did have this intraday descending channel here, and we ended last Friday at the upper end of it. So here we have another candle. This time, I mean, it looks the same, but it's not a hammer, it's a hanging man, because it forms at the top of an uptrend. So what we want to see in order for it to reverse, we would like to see bearish stochastic. They're still bullish. And everything else, trend and momentum tools, they're also bullish. So the idea of the pattern working out are low. So the chances of the pattern working out are low. So I would rather expect a break above 23.49, which is a move above the peak, is a move above the channel as well. So I think this would be quite meaningful, and this could then possibly kick off this upside correction here. Yeah. When would we be wrong? Well, the bearish setup would be triggered with a move below 23.32, right? With a move below the hanging man, and then we could maybe make it up until here. And if we make it below 22.88, we could then simply continue the downtrend. So you can see we analyze top down from weekly to intraday, but we trade, or we see the first signs of a reversal from bottom to the upside. So here I want to see a break, or I don't want to, but I would see a break above the descending channel as being potentially bullish, which could, for the intraday, which could then help to kick off, or at least test, resistance at a 23.6% FIB. And a move above this would then probably lead to a more extensive correction, which could then potentially lead to a more extensive correction on the, or just a small correction for now, on the weekly chart as well. All right, that is all for the TTF front month. European carbon emission certificates are quite an important turning point. So we see that on the weekly chart, we get another strong bearish candle here. Nothing new, and we are now hitting support at 51.9. I kind of want to see that level break to continue the midterm downtrend. You can see here we are going all the way back to 2021. And then we have this like minor resistance turn support level, and then we have like another minor trough from January 2021. So it's getting slim. We are running out of levels essentially. And also back then, the current contract wasn't traded all that much. So I'm not entirely sure how reliable these levels are going to be. That's why it's not so important that the volume here is picking up, because it hasn't been trading for all that long, I mean actively. So, but what we can say with confidence is that trend and momentum tools are all firmly bearish. You might notice that I have removed an old channel. So this is now a trend line. Here you go. So previously, I think there was a channel from here to there. I think there was the channel. It was now removed because there's simply no value in it anymore. So instead, I put in 2 trend lines, and even this trend line here is questionable how valuable it is at the moment, with the market moving lower and lower and lower. But overall, bearish. And the downtrend is accelerating, which kind of means we are looking still for selling opportunities on the daily chart. And of course, short selling opportunities are with level breaks or after corrections and then moving lower. So we might be in luck because last Friday ended with a hammer candle. Also at the 51.9 level. This is now questionable because it wasn't confirmed with the stochastic. You see, nothing is happening here. So that kind of means that the idea is still for the market to move lower. That's why the preferred direction here is still bearish overall. However, a move above the trend line near, what is this, 54.87, yeah, somewhere here, we would possibly pause the near-term downtrend and we would then see the market correct higher. I would turn near-term bullish above 59.05, but remember, analyzing is not trading, so it doesn't mean I recommend doing nothing between, well, 54 and 59, okay? One interesting thing is now that we might have gotten a trough here, we see that this trend line is turning into a descending channel. And descending channels are usually eventually resolved to the upside. So yep, understood this, identifying identifying the falling wedge isn't all that useful anymore in terms of downtrend continuation. But simply this piece of evidence shows us that, yeah, okay, so the pattern usually resolves to the upside and we have a bullish hammer here. So maybe there's something to it, but as long as it still isn't confirmed by stochastic. So what does it mean? What am I even saying? Okay, so below 51.9, downtrend continues for now. Above the trend line, we might see a little bit more of an extensive move higher. And we do see that already on the intraday chart. Here we have 15 minutes. So you can see we have this like old intraday channel that was broken to the upside. And we ended the week with a shooting star. So below the shooting star, which like used to be a support level, then it was resistance, and now it's support again, which is 52.36. A move below this level would possibly lead to another correction and then maybe higher. I don't know. Can't be told for sure right now. Immediate upside continuation is likely above 52.71. So even with a move lower, I wouldn't really be concerned as long as we still make higher highs and higher lows. Then we would still continue this uptrend, which would then possibly continue the daily charts hammer with the potential to resolve this falling wedge higher. And that is all for EUAs.